Italy, a nation renowned for its rich history, vibrant culture, and culinary delights, finds itself grappling with a disconcerting economic reality. Despite a brief period of modest growth, the Italian economy has been characterized by sluggish performance and a lack of dynamism for several years. This perplexing situation has raised concerns about Italy's long-term economic prospects and its ability to maintain its position as a leading European economy. At the heart of Italy's economic woes lies a complex interplay of factors that have conspired to stifle growth and undermine prosperity. From structural rigidities in the labor market to a cumbersome bureaucracy, Italy faces a multitude of challenges that demand urgent attention. The Italian government, along with policymakers and economists, are acutely aware of the need for comprehensive reforms to revitalize the economy and restore confidence. However, amidst these challenges, there are glimmers of hope. Italy possesses a highly skilled workforce, a robust industrial base, and a strategic location that provides access to key European markets. By addressing its deep-seated structural issues and embracing innovation, Italy has the potential to unlock its economic potential and reclaim its rightful place as a global economic powerhouse. The road ahead may be long and arduous, but the rewards of a revitalized Italian economy are well worth the effort. Italy's gross domestic product, a key indicator of economic health, has been on a worrying trajectory, painting a picture of stagnation and missed opportunities. While other advanced economies have experienced periods of robust growth, Italy's GDP has remained stubbornly low, barely registering any significant expansion in recent years. This lackluster performance has raised concerns about the country's long-term economic prospects and its ability to compete on the global stage. The European Commission and the OECD, renowned international organizations, have issued forecasts that highlight the challenges facing the Italian economy. These projections suggest that Italy's GDP growth is likely to remain subdued in the coming years, lagging behind its European counterparts. The reasons behind this projected stagnation are multifaceted and deeply intertwined, stemming from a combination of structural weaknesses and external headwinds. One of the primary factors contributing to Italy's sluggish GDP growth is its rigid labor market. Complex regulations and bureaucratic hurdles make it difficult for businesses to hire and fire workers, discouraging investment and job creation. This lack of flexibility in the labor market has led to high levels of unemployment, particularly among young people, and has hampered Italy's ability to adapt to changing economic conditions. Moreover, Italy's aging population poses a significant challenge to its long-term economic growth potential. With a declining birth rate and increasing life expectancy, Italy faces a shrinking workforce and a growing burden on its social welfare system. This demographic trend has put a strain on public finances and has made it more difficult for the government to invest in education, infrastructure, and other areas crucial for economic growth. Italy's labor market presents a perplexing paradox, a nation renowned for its craftsmanship, design, and entrepreneurial spirit grappling with stubbornly high unemployment rates. The unemployment rate, a key indicator of economic well-being, has remained persistently elevated in Italy, particularly among young people seeking to enter the workforce. This chronic unemployment poses a significant challenge to Italy's economic and social fabric, hindering growth and fueling social unrest. Several factors contribute to Italy's unemployment woes. The country's rigid labor laws designed to protect workers' rights have inadvertently created a dual labor market. This system makes it difficult for businesses to hire and fire workers, leading to a preference for temporary contracts and discouraging investment in permanent positions. As a result, young people often find themselves trapped in a cycle of short-term jobs with limited benefits and little job security. Furthermore, Italy's education system has struggled to keep pace with the evolving needs of the labor market. There is a mismatch between the skills possessed by graduates and the skills demanded by employers, particularly in high-growth sectors such as technology and innovation. This skills gap has contributed to high levels of youth unemployment, as young people find themselves ill-equipped to compete in the modern job market. Addressing Italy's unemployment challenge requires a multifaceted approach that tackles both the supply and demand sides of the labor market. Reforms are needed to modernize labor laws, making it easier for businesses to hire and fire workers while providing adequate social safety nets for those who are unemployed. Investing in education and training programs to equip workers with the skills demanded by employers is also crucial. Inflation, the rate at which prices for goods and services rise over time, has been a persistent concern for the Italian economy. While Italy has historically experienced periods of both high and low inflation, recent trends have been characterized by relatively low but persistent price increases. This low inflation environment, while seemingly benign, presents its own set of challenges for policymakers and businesses alike. Several factors contribute to Italy's inflationary dynamics. The global economic slowdown, exacerbated by geopolitical uncertainties and supply chain disruptions, has led to higher prices for imported goods, particularly energy and raw materials. This imported inflation has put upward pressure on consumer prices, eroding purchasing power and dampening consumer spending. Moreover, Italy's sluggish economic growth has contributed to a lack of pricing power among businesses. With weak demand and intense competition, businesses have been reluctant to raise prices, fearing that doing so would further erode sales. This subdued pricing environment, while beneficial for consumers in the short term, can stifle investment and innovation, as businesses have less incentive to invest in new products and services. Managing inflation effectively requires a delicate balancing act. Policymakers must strike a balance between supporting economic growth and keeping inflation in check. This involves a combination of monetary policy measures such as adjusting interest rates and fiscal policy measures such as government spending and taxation.